Okay, everybody, it's me, Gregory Mannarino. It is Thursday, August 5th, 2021. How about this? A new all-time record high for the S&P 500. Now tell me, how many of you who follow this blog are in the slightest bit surprised? Well, you shouldn't be. I've explained to you over and over again, we're going to get record high, and we haven't seen anything yet. As a matter of fact, Goldman Sachs today came out explaining that they believe that the S&P 500 is going to rip higher from where we are. So again, I understand what a lot of you are probably saying, oh, Goldman Sachs, blah, blah, blah. But you know what? I've been explaining this to you for a lot longer. And I've been correct. I've kept all of you on the right side of this. And we haven't seen anything yet. It's just an insane situation. All right, so let's talk a little more. So like I said, rally across the board, new record high for the S&P 500. Did you see what happened today to crude oil and the 10-year yield? Two big keys to this market. 10-year yield came up nicely. Last time I looked at it, 1.21. Crude oil reverses and finishes up nicely, about 1.5%. That's what drove the market today on the back of more bad economic news, which is the main driver here. It's astonishing, and that is not going to stop. The cycle of bad economic news is going to continue until, well, in perpetuity. It's not going to stop. And that is going to propel the market higher because like I said, you got the investment banks, you got investors saying, hey, the Fed's not going to stop. They have actually just begun, in my view, with regard to inflating, creating debt out of thin air, buying it. It's an epic situation, but that's going to be a driver of this market. No matter what happens to the economy, we're in free fall right now. We found out today that our trade deficit is hyper ballooning. Americans are borrowing from their credit cards at a record pace just to make ends meet. We'll cover all that in just a little bit. But nothing matters to the market. Nothing at all. As long as the Fed continues to do what they're doing, and they're going to keep doing this for a long time, despite what we heard today. I guess something else that we need to talk about. So just be on the right side. Watch what's going to happen to the debt hyper bubble. It's going to hit heights that people can't even imagine. Way bigger than it is right now. It's the mother bubble of them all. The mother bubble of them all. All right, so like I explained to you, you got 10-year yield came up nicely, something that we need to see to get a rally out of the market. Crude oil, well, nice turnaround here, getting bid higher, about $70 a barrel again. Market's loving that. I'll give you two guesses as to what sectors of the market, what two sectors of the market were the best performers today on the back of crude oil making a turnaround. Exactly, you're so smart. The energy sector and the financial sectors, these were the outperformers of the day. And it's all about crude oil. I told you, it's the lifeblood of the military-industrial complex. Okay, dollar flat to slightly lower today. Gold and silver unfortunately turned around and suffered losses today. Cryptocurrencies doing great. Definitely did well today. So let me cover a few things with you. I already talked about Goldman. Goldman Sachs said stocks are going much higher. Sound like Greg Mannarino, huh? I wonder why that is. Maybe because some of you guys over at Goldman are watching this video right now. I know you are because I know some of you. And yeah, you watch my work. Anyway, let us talk. Trade deficit, people. Debts and deficits are hyper ballooning. We just found out that it hit another record high and is surging at an alarming pace. What else would you expect? It's just, it's a freak show. Consumer prices are rising at their fastest rate ever. And at the same time, Americans are borrowing beyond their eyeballs. Sounds like a great situation for you. Now, this is a joke. I'm just I just have to read this. So this guy lately, Federal Reserve President Waller, he's been crawling out of the woodwork. I guess he wants his 15 minutes of fame. He's kind of a quiet guy. I haven't heard from him in a very long time. Now all of a sudden he's making his appearance. Now this is what he said, and the market's laughing it off. Accommodative monetary policy may be pulled sooner than people think. Duh! No, sir. Sorry, you idiot imbecile. It's not going to happen, and we all know it. You want to come out here and, lie to all of us? Well, then, it makes you look like an idiot, which you already are because you're a member of the Fed and you're all a bunch of criminals of the highest order. So absolutely not. This is not going to happen. At the earliest, way earliest, 23, and I say that's crazy. It's probably going to be more like 25 or 26, 2025, 2026 with regard to a rate hike from the Fed. They're not done. If you realize the mechanism, why this is going on, what's the goal? What is the end game? If you've been following my blog, you know exactly what this is. The end game of the Fed is to inflate, along with other central banks. Inflate beyond your wildest dreams. Okay, they want to buy it all. They want to, create debt and then buy it back through a vicious mechanism that I've been covering all over and over again. They're not done, and they're not going to be done until they own it all. And that's what they're doing. Look, central banks were created for one reason, and they're all over the world, and they're all owned by the same entities. To at one point, one day in the future, this has started over a century ago, they would be the government. And that's what we have right now. We have no representation. It's the banks. It's the central banks that dictate policy. It's not our policymakers. It's not the freak that can barely walk and chew gum at the same time. I'm talking about Biden. It's not him. It's none of these people that sit behind the Resolute desk. People with bad complexions, bad hairdos. I'm referring to Trump, the other puppet before him. Don't matter. Doesn't matter who sits there. Don't matter anymore. It's over. This is not the United States of America. This is the new world order or disorder. And welcome to it. And it's just not going to stop. But we'll continue until the middle class is eradicated like a disease. Okay? The extreme poles with regard to haves and have-nots is achieved here. All that's been done, people, again, and we're watching debts and deficits hyperballoon, like I've explained to you would happen for many, many years with no end in sight, is we're watching an elimination, a wealth transfer effect that I also said from many years ago would occur. And that is robbing, a one class of people blind in order to enrich another class of people, the ones that don't really need the money, the well-off and the rich and the super rich. And who's paying the price for it? Well, it's the same as it always has been. It's the middle class. It's an astonishing thing to see. A complete eradication of a class of people in a paradigm shift. I told all of you many years ago, and I'm telling you now, that we are in a new environment, a new set of rules, a new paradigm. And this is it. Wake up and understand what's happening and why it's happening. Why is this happening? It's the central banks who want to rule the world by owning everything. And that's exactly what they're doing. They're creating slave nations, individual slaves who continue to borrow beyond their eyeballs just to try to maintain a certain lifestyle. And these people are going to be forced into the lower rung of society. This is what this all is. It's a very twisted mechanism, but I think you all know that. All right, look, so in summary here, no surprise to you. A new record high for the S&P 500. The rest of the indices are going to follow suit too. Market is going not just higher, but much higher. Crude oil, it's going much higher too. Okay, of course, assets fluctuate. Okay, for those of you that think assets only go in one direction, no, it's a random walk with an upward drift. You see that? That's how it works. That's if you understand that and you know why, like I've been explaining lately, you need to buy the dips in this market looking at the 10-year yield, watching crude oil, the 10-year yield is the key. If you want to look at one key as to whether you should be buying the dips in the market or not, it's the 10-year yield. 10-year yield staying suppressed is a clear indication to me, and anyone who has the slightest clue about how the market works, that you should be buying the dip. Once we get a spike in the 10-year yield, which would signify a sell-off in the debt market, a big one, that's when you don't buy the dip and you maybe think about getting short the market. You got to watch crude oil, you got to watch the dollar index, the Dixie, and of course the Federal Reserve balance sheet, which is hyper-ballooning. All right, people, look, you got it covered. I got your back, and you all know that. All right, this guy here loves you a lot. Please share the video. Get it out there as far and wide as you possibly can, and take action. Do something to at least try to spare yourself financially from this disaster that is coming. See you in the morning.